One that's in my fund is Wise from UK, a very interesting company, not excessively priced at the moment. Now you see in the US where stocks have come right down. And in some cases, I'm looking at companies like the Trade Desk, for example, that have come off about 50, 60%, and a phenomenal business in its own right with founder still at the helm. There's a narrative in the world at the moment that says it's East versus West. And a big theme of our chat will be diversification and risk management, which I come back to. Is China is a huge part of any risk mitigant in a portfolio. That's how I kind of think about the macro picture, is looking broadly across the regions, making use of the lack of correlation and using that to your advantage. There's this kind of mythology around fund managers having access to management teams and being a huge advantage. And when you look at what they actually say, they're actually saying, well, I just read the body language of the team and I can tell if it's good or bad. That's useful if you're trading in the next quarter. Yes. It's not useful if you're actually thinking long-term. Do they have actual potential to grow a business over 10, 20, 30 years? On a philosophical level, it's not about how concentrated you are, but it's more about control, isn't it? You can de-risk by having control over actions you take. The weakness of a company like Tesla is that they're not vertically integrated like BYD. BYD has mining operations, shipping operations, battery operations, the full vertical chain. And that gives them a huge pricing advantage to the point where I believe they can be the next Toyota.